Salutations and welcome everyone to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. This is Stoic and we're back with another episode. Today I have the pleasure of having with me Josh, and he first bought Bitcoin back in 2012 while still in college, and 2017, 2018 was when he first started his career as a trader by engaging in arbitrage between exchanges. He's been in the market since then. He describes his edge as being on-chain analysis and narrative building, which we'll get into. But without further delay, let's get right into it, man. Excited to have this conversation. Could you please introduce yourself?
Hey, excited to be here. I'm Joshua, currently head of trader at Mosaic Capital, and I've been in crypto from like 2017 as a full-time job. I first bought my Bitcoin, like you mentioned, in 2012, I think. And I'm my Twitter is Joshua Deuk, and currently tweets random stuff for people to trade with me.
Yeah, awesome, man. Awesome. Yeah, we'll put your Twitter on here as well, so people can go and follow you and check you out over there as well. So let's get into your background a little bit, man. So you said you first bought Bitcoin in 2012. How did you come across Bitcoin while you were in college? Do you have like a story in terms, or do you remember like the first time you encountered crypto or Bitcoin in general? How did you learn about it?
Right. So I studied in Australia back in days. I was born and raised in Korea, and I studied in Australia, and then came to Korea for some instance when I was like when I was 20 something, and then I need to do the payments in overseas, and then I found out that Bitcoin back then was a good payment solution. They were streamed by money bookers. I think right now it's called Skrill. There were some other like payment gateway solutions, services that were utilizing Bitcoin to be paid in a cards, like not credit cards, but like prepaid cards. So that was the first time got into the crypto. And then I read about the Bitcoin white paper, just like everybody else. And then I liked it, but I wasn't looking at it as an asset classes. Back then, I thought it was just like one of the game items, sort of, that you can use it as if it's a fiat currency, but it moves a lot. So that was my first experience getting into crypto.
That's interesting. And then there was a gap, right? So you were in college for a while, and then I believe like 17 or 18 is when you first started your career as a trader. What happened between that time period? Like, were you actively thinking about crypto, or like what made you shift in that direction in terms of being like, hey, I want to be a trader?
So I think the first time when I first traded something was when I was actually 14. I think it was 13 or 14. I used my mom's accounts because I was underage who can't be trading stocks. So I was trading Korean stocks with my mom's account. First reason was my father used to trade stocks a lot, but he always failed it. He never made it. And then I thought maybe I could make it. And then I read some of the books from Warren Buffett and thinking I could be the guy, because in one of the Warren Buffett book, he says he first traded his stock when he was 13 or 14, but he mentioned that if he traded stocks 1 year earlier than when he first started, he thinks his net worth would be 3x higher than he did. So I thought might as well just trade as soon as possible, right? So That's when I first traded stocks, and then I traded like FX, commodities, but it wasn't really full-time thing because like I'm a student, I'm underage, I didn't have that much of time or like a energy to focus into it because I wasn't really making much. I was only making small money and then losing a lot too. So it was always in my life. I really like the stock market. I really like how market is constructed or how people trade around it. And there are so many people trading around it. Guys like me, guys like my father, guys like you, like somebody's mom, or it's everybody. And everybody trades with one things or similar products. And then some people wins and some people lose. I was really fascinated about the fact that like it's a zero-sum game, and then they're gonna be always a winner and always gonna be a loser. I really like about the fact.
That's really interesting. So you got into it really young. Where did you get your information from in terms of like how you traded, and what did that look like initially? I mean, you kind of alluded to the fact that you made some money, but you also lost a lot. And you said you use your parents' money. What did they think about it? You're like, hey, my kids, trading and losing all our money. Like, what did they think about it?
Yeah. It wasn't their money. It was a pocket money that I was saving, and then Like 20 years ago, in Korea, online gaming was huge. Like there was Maple Story, there was Lineage, there were so many online gaming, and then actually you can play games and you can level up, craft items, and you can sell it online. And I used that money initially to trade. That was my seed money, right? It wasn't over than $2,000 that I've saved up more than like 5 years. So they didn't really care about me losing or me winning. The first trade that I was doing was mainly driven from the movie Avatar. So you know that Avatar, that the green alien, the blue alien comes out, and then they do the
Oh yeah,
linking
yeah,
thing.
right.
It was the first movie that you gotta wear like glasses that gives you 3D effects. And then I found out that 3D effects glass was manufactured. One of them was manufactured in Korea, and that was my first trade. I thought it was that was mind blowing, and then it's gonna change how people looked at a movie. So that was my first stock that I bought it. But the studying about after it went up like 5x, 10x, I didn't take profit, right? So I didn't really making much money. Hence, I decided to study about how to trade stocks, reading many books, like reading almost every book that was pitching about, lecturing about technical analysis when I was like 15, 16.
Interesting. And so, okay, so after you were 15, so you were trading, when you were fairly young, you bought your first Bitcoin in 2012, and then, there's a time gap between that. Were you still trading in between, or were you just focused on other things before you jump back into trade? You wanting to be a full-time trader?
Right. So after first time I bought it, I had some stash at Mt. Gox, and then I had some stash in everywhere, right?
Right.
I pretty much lost everything. Mt. Gox really actually didn't work out for me. And then in between that, I wasn't really focusing on crypto because as soon as I got hacked, I wasn't really. I thought I lost everything, and then I really didn't get into it until there was a kimchi premium that happened in Korea back in 2017. So that 2017, when I saw there was like 30-40% upside of moving Bitcoin from overseas to Korea, that was initially pivot point for me to go full time. And before that, I was just trading stocks and commodities.
That's really interesting. So you found out there was like a premium opportunity, and you basically jumped on it.
Yeah.
So how's your trading involved since then? So you did the arbitrage opportunity. How long did that last? Was it like a couple of month thing? Probably something like that, right? Probably a couple of months or something like that.
Yeah.
And then where did you navigate from there? What did you think? Okay, this is what I want to do, and this is the direction I'm going to head in now. Since that trade to now, what does that process kind of look like for you? And how your mindset has shifted from that the mindset perspective and also the technical perspective in terms of how you trade and how you look at things.
So I think so. After the first arbitrage, because I already learned a lot about the technical analysis, and because I was young and having a very flexible mindset, I thought looking at a lot of data would be helpful because a lot of people wouldn't be looking at data, and then a lot of people still then didn't believe in Bitcoin as people believe in Bitcoin right now. Before it was just like I said, even for me, it was just sort of I thought Bitcoin as a game items, and then other people were having a hard time understanding about it. So initially, it was a lot of technical analysis that I learned from reading a lot of books when I was really young, trading stocks. And then it was focusing a lot of the on-chain data, because people were not looking at on-chain data, believing that they have no relevance in the market. I'm sorry, I think I missed the question.
Yeah, no worries at all. So yeah, that was part of it. Like, I'm just interested in knowing like how your mindset like changed over the years, since like 2017, 2018. Like, you jumped on the arbitrage opportunity, and that it sounded like that kind of kicked off like your full-time career, if I'm correct, right?
Yep,
So
yep.
like from there, where did you go? Because it sounds like you were doing technical analysis before, but it kind of shifted to more of a narrative kind of narrative building, what you call narrative building and on-chain analysis. How did that perspective change for you in terms of going from technical to narrative building? And then
Okay. So,
yeah,
right.
like I guess from that first, the arbitrage that you did, from then to now, what do you think has changed for you in terms of like how you think about trading and
Right.
how you approach it?
Got it. Understood. Okay, so over time, there are like different stories in between how I developed my trading. Like I was building exchanges, and I was back trading like margin trading mainly at BitMax. But over time, I grew the ability to look at things in a bigger picture. So
Mhm.
technical analysis became less and less important, but I was looking more for the flows of how each individual products were developing over time. So before, when I was only looking at technical, because everybody's looking at technical, and in the end, it's all the same. It's how people use it. There are so
Right.
many technical tools, but it depends on how they look at it, which time frame they are using at it. So there are a lot of noise if you're really thinking about it. So, but at the end, I thought after losing a lot and winning a lot, it was mostly to do with understanding where we are at the market, which is looking at bigger picture, higher time frame, and just adjusting the risk management in terms of size and analyzing where we are, or like choosing which product, looking at like various products flow over time. That definitely gave me a better understanding about the market and how I approach to looking at market. It's not about the trading itself, but I was focusing to build a portfolio sort of approach, even when I'm trading per market, because you're not going to be nailing each and every product, but overall you want
I
the
see.
P&L graph to gradually grows up without
Mm.
getting liquidated, right? So initially, when I was putting every asset that I have in one product, I was trying to divide it into a lot of products or a few products that I really believed in, and then some products I trade with short time, and some products I trade with longer time frame. So the approach was initially was very technical, looking at a lot of Fibonacci, a lot of indicators, and then notice that it's not going to work to really make it to the good trader level. Hence, I evolved bit by bit, understanding more and losing more at the same time.
Interesting. Yeah, let's unpack this a little bit. I wanted to get into like your trading edge because you mentioned on-chain analysis and narrative building. How did you build that? And like, what do you look at? I mean, obviously you don't have to disclose your exact edge. We're not asking for that, but more so like, what is your mindset when you say like, you're talking about like looking at flows? Like, what are you talking about when it comes to that?
Mm. Okay, so for me, I think a lot of things matters. So even though I say on-chain data,
Mhm.
it's not just the one thing that you got to look for, but like I mentioned, it's just a part of things. So for me, when I look at the market, when I look at the products, what to trade, I usually choose BTC as a sort of an index. When BTC goes up, and if some other tokens follows up, or even higher multiples, like I usually try to focus on those products in my watch list. And at the same time, when BTC goes down, and if this certain product doesn't go down much, I believe there is a buyer flow, and then there has to be a reason behind it. So a little bit of technical is in there to analyze the product, and then and then the on-chain part comes in where I dig into the a contract, I dig into the holder distribution, I dig into the whether or not foundation are selling, or if there is any other catalyst or upgrades that's going to impact the product that I'm trading, so I know what's coming on. And those are the things that it gets mixed to come up with the trading idea.
That's really interesting. That's an interesting approach. What I was thinking about was, there's a lot of reflexivity when it comes to this space, right? So there's a lag between narrative and price, which works in both directions. For example, with the Bitcoin ETF, there was that narrative for a while, and then it kind of slowed down, which is why we've been chopping. But the price kind of lags behind the narrative. Do you think about that? Is that something you take advantage of by any chance, or um, I'm just trying to
I
get
think
your thought process on that. If you think about that at all.
right. Okay, so this also links up with what I just said. So before narrative forms, there are usually a big buyers in the market that supports the price. So
Mhm.
if let's say if BTC is an index and if BTC is correcting, right? if, for example, if AI sectors are not getting sold down, even though it's an altcoin, it has a higher beta, it should be, if BTC goes down 10%, ARTS has to goes down to like 20-30%. If there are some sectors that doesn't go down, it means there are big buyers who is supporting the price, right? And that's when I start to build my own thesis, and that usually plays out as a narrative. So in whole, so like you mentioned, it usually the narrative, even the narrative comes, the price doesn't picks up, or even before narrative comes, price tends to picks up first. That's how usually market tends to work in crypto, I think, as after my experience. So building a narrative is always important than just looking at the current price and chart to trade those products, I think.
Yeah, that's really interesting. And I'd like to get your take on this as well, right? Last run was completely different in terms of the liquidity that was going around. This run has been unique in the sense that it's very fragmented. You know, there's only certain sectors that have caught that bid.
Yeah.
How have you navigated that situation, like in terms of like, and some of these bids are very like short time frame. You know what I mean? Like for example, AI will pump. Like we had the Nvidia earnings. We had like a couple of weeks where render was pumping, and then that was it. So are you like, what time frames are you trading, and are you rotating in and out of these narratives? What does that look like for you this run?
So for me, so there are a few. So even from September, when I first thought the market bottom and we're gonna trends, I came up with four narrative that's gonna hit in the market. One was Solana. Two was AI sector because people were always talking about it. The first one, Solana, is because I really like the fundamental of how it went, how it grew, of a lot of developer numbers and a lot of real community users behind it. When Solana was trading at $20, $30, and same as back in like 2020 when it was trading same price range, but developer numbers were tripled. So I really like Solana. So Solana was a big narrative that I was thinking. Second was AI because everybody was talking about it. It's a new thing. It was like metaverse NFT that I thought from last cycle. And then it was GameFi, and then it was IBC. Meme wasn't really part of it because meme, I thought it was under subcategories for main tokens like Ethereum or Solana. And then I was mainly focusing on those products and how the price was developing over time. The price developed, so narrative, because narrative forms in few months, few weeks, usually price action or price flows, you can see from multi-months or even a year that before it really picks up. So I think looking at the price action gives you idea what narrative that you're going to play. And like I said, because I've already set up few narrative that I think potentially is going to play out, it was easy for me to spot on which product that I was going to be trading. These times, if, for example, last 2 months, it was more of a short-term trade because I thought market was going to range, and I still think market going to range in a shorter term. So if September, if my trading was swinging, like taking trades more weeks and few weeks, even a month, now I'm only trading intradays within a week because all the narrative is kind of already played out. Every narrative that I thought was going to play out from September, it already played out, and then right now market only has the narrative that's already in the market that's been around for a few months, and it's just rotating, right? The problem that I see is there are not really new money coming in because funds are just buying into BTC or ETH because the market cap is huge. And if you're a fund and managing like billions of dollars or like hundreds of millions of dollars, they're not going to be able to buy a few $1 billion market cap only because their market cap is too small, right? And it's too early for them to have exposure. So real money haven't been really inputted in the market. Now it's just rotating to each other, right? And I can tell because a lot of the products that went up from September, like a lot of them reversed. So it's literally, there are a few money came in by smart whales or few funds or big funds, but it's not about a general money lifting up the market. Hence, the picking narrative was very important, and then narrative really played out well for few people, but not most of the people.
Yeah, absolutely. Yeah, I agree with that. I mean, there's that saying that a rising tide lifts all ships. That was not the case this cycle, right? Like you said, there was only certain sectors, and currently it's pretty short lived, these rotations. We're talking about narratives and stuff, and we're talking about how like whatever from September has been kind of exhausted is the same money that's rotating through, right? What are your
Yep.
thoughts on in terms of what's the next narrative, or what do we need to go in terms of for Bitcoin to put in a new high or continue to trend continuation? What
Okay.
is your thought on that?
Okay. I think that's two different questions, right? So first, Bitcoin wise, I really think Bitcoin is really undervalued comparing to stocks, commodities. Looking at gold, I think it's really underpriced. Like comparing to previous cycle high, I think gold price jumped from 1600, 1700 in end of 2021, now close to 2400. When Bitcoin was traded around like 63,000, 61,000, when now it's only trading at 71,000. So I think Bitcoin itself doesn't really actually need a narrative to really pick up. I think over time it's going to solve out because people looking at Bitcoin, or big funds are looking at Bitcoin as a good asset, as a digital gold to hedge inflations, or good risk asset that they can make money out of it, right? So I
Right.
think for BTC, it just needs time for people to understand more, or for more accumulation time, sort of. So the next question would be, what's the next narrative? So for now, like I think the only narrative that we can really focus right now is probably ETH ETF. 19B is already passed, so now we're focusing on S1, right? But
Right.
even S1, I think it has to be with like whether if staking is going to be included or if staking is not going to be included. If staking is included, that's a great selling point for a ETF fund manager to sell the products. But if there is no ETH staking involved, because there is no extra yields that they can chip in, I think the buying flow is not going to be strong as BTC. But of course, it's going to be a very good short-term narrative.
Mhm.
Overall, what's going to be the narrative over the cycle? I think AI, of course, going to be decentralized AI, going to be the longer, medium-term cycle that's going to be always in the market until market tops, because it's the only new narrative that we have found in the market that's have gained significant attention, looking at price and looking at Nvidia price action, right? So I think that's going to stay. But other than that, I think it's just going to rotate. Maybe GameFi might hit the narrative at the end of the cycle, but mainly because the previous cycle, GameFi was only a form of a gamified build looking at Xe. It wasn't really game, right? People were not really enjoying it, but because after what happened to Xe, there was so much money inflow to the gaming area. I think there are going to be a lot of good games that's going to come out like end of this year or towards the next year. And I think that can be a new form of GameFi narrative, not the old one.
I see. I see. And what are your thoughts on like ordinals and runes? Is that a space you're following? Because runes picked up,
Oh,
ordinals picked
okay.
up, and then now it seems like it pretty much died off. But I like to keep my attention on in spaces where people stop talking about certain sectors or kind of drop them completely, and then I like to see if people are still building in those
Yep.
sectors. So what is your thought process on that in
That
terms of
was
have you ordinals or
I
runes?
think that's a great idea. I think that was a great question, because thinking about it, actually, I was like runes and BRC was back of my mind,
Mhm.
and I think it's gonna be here. I think BTC staking is also can be a new narrative that we haven't seen in the market because there are no products that we can trade. And regarding BTC staking, other than stacks, the runes and ordiner is just like memes, right? For me, I think it's just a new form of how ERC20 was developed back in 2017, 18. Ethereum came out, and then it was some sort of a global computer, and then people around the developer were using ERC20, different ERC formats to do a experiment, right? And I think same for Bitcoin. BRC20 was the first form of experiments on top of Bitcoin, and runes might potentially do something that we don't know, or we haven't picked up really yet, right? I
Yeah.
think I still believe, just like Ethereum, there are many developers who is in love with Bitcoin ecosystem and who is in love with to like really building the Bitcoin, right? Like as a like they're trying to utilize Bitcoin and some sort. I think it might really pick up from Chinese community because I see market in two different sections. One is controlled by US and one is controlled by Asian, and this Asian is usually consists of Chinese and Korean, and these Chinese have their own market, sort of. You know, they're very like country itself is very restricted, but they have their own strong communities. And looking back from September, Ordi have grown like exponentially. Like nobody from US side really thought it was going to happen, but it really happened. Right? So I think those people are still there, and they're going to be staying there because Chinese tends to love Bitcoin more than United Americans. They've been like staking Bitcoin long time ago, back in 2017 when I was trading arbitrage. And then the mindset of Chinese, they've been looking at Bitcoin as a digital gold, and all these derivatives around Bitcoin, things like runes and BRC, has potential to grow as a form of a speculative asset than fundamental. But I think it's gonna stay for a while. So that was a really good question.
Yeah, no, I appreciate you answering that. You know, this is interesting, and this segues into my next question as well. You know, I mess around on chain as well, and you know, there's certain times where like the Koreans or the Chinese are bidding certain, like even on chain, you could see like after certain times, when we're talking about I'm talking about absolute shitters, right? You could see the bids coming, you could see the bidding coming in, and along the same lines, the question I wanted to ask you, it's fairly apparent to me that from that, like in that part of the world, there's a different kind of conviction when it comes to things like trading. I feel like
very different.
The trading style is extremely aggressive, right? Where do you think that comes from? Is that just part of the culture? Is that like some, is there like a lot of, is there like a casino culture? Like, where do you think that comes from?
I think one, it's definitely has to do with casino culture, because like even in the world, a lot of casino, the highest high rollers are usually from Chinese, like because of how they treat money. I think it's very different from how, like it's just different level, right? They just gamble in a different level. And I think Koreans also got affected from Japan and China. So I can see that a lot of this Korean Chinese monies are very short term, very aggressive, and sort of an all-in thing. Like they don't like making a portfolio, but if they just like one product, they just believe in it and they just stack everything into it. Like even in crypto market, there are a few tokens that Koreans, Chinese, and Japanese like. One is ADA, two is Ripple, and actually those asset class have had return last cycle. But people who believes in these, they still believes in it. I can see it from, like, if I search in YouTube, there are so many haters around these asset classes. Then there are so many believer in these asset classes. Like a lot of people calls like Ripple gonna go $100 if BTC hits like $150,000. There are so many clips about it. There are so many believers into it. So I think there are some reasons behind it. One is language barriers, and two is, like I mentioned, there is a cultural difference. Because there is language barriers, they don't know new products. They don't know how products are building. They don't know the progress of how things are moving like fast, right? In crypto, like few weeks is like few months in TradFi.
Oh yeah.
Few months is like few years in TradFi, right? But because of there is a language barrier, they can't pick it up. So what they do is they focus on few things that they really like, and they just like worship those, right? And then they just go all in and get out, all in and get out. So statistically, even for crypto, even for traditional stock market, I've looked into the 10 years data of traditional finance stock trader data, right? Their P&L. Only 4% have made it in trading spot crypto traditional finance stocks, and only 0.04% have made money in 10 years trading future for TradFi. So that's a like big numbers that you can see, like how they trade. They usually not going to make it because they only trade short term.
That makes sense. I've always been fascinated by that. Yeah, go ahead.
But the thing is, if you do nail that one narrative with them, which is like potentially can be a runes or ordiners, like
that's a printer.
Yeah, you
Yeah,
can make
you can make it from that one.
everybody's in there, everybody's all in, everybody believe in it, they're bag holding it. Like if you find that one, like you can definitely nail it.
Yeah, bro. I'm trying to get into one of these telegrams. Like, I need like a Korea telegram. Hook me up, bro. I need
have
that
to,
conviction. I need that kind of
Mm,
conviction on my side.
have to, must try,
Yeah,
must try.
yeah. But yeah, let's segue a little bit. So, there's an entire conversation about either being a specialist in a few
Mm,
different assets or understanding nuances on a understanding nuances on a few assets or trading any number of tickers at a time. There's different trading styles. There's people who pair trade like 100 position at a time. It obviously is
yeah,
very unique in nature.
yeah.
How do you think about this, and how do you personally filter information and find setups? I mean, we kind of touched on this with the on-chain analysis, but if you could elaborate that on a little bit more.
Right. So in short, I think you shouldn't be trading numerous tickers. I think you should be only trading max 3-4 tickers, and then consists of 3-4 narratives that you're going to be focusing. Because if you're trading so many tickers, you will eventually lose. You will eventually miss the bigger pictures, which it happened to me. It happened to me also. Previous cycle, the cycle before, talking to many successful traders that I know who have survived in traditional finance and crypto market, who made hundreds of millions plus billions. Nobody actually trades many different tickers at the same time, mainly because I think human brains cannot be focusing onto hundred of tickers first, and two, the conviction levels dilutes, because if you're trading so many products, your conviction levels goes down because your mindset is very divided. And then if market slightly moves, even though you're right directionally in over time, if you're looking at a longer term, you usually can be shaken out if you're only trading if you're like your conviction level is low, right? And then because you're not 24/7 as a human being, you're not a bot who can trace in and out every single pivot point. It usually, if you try to get in, get out, you usually lose your size, and you're usually not able to get in at the right perfect time, right?
Mm-hmm.
If you're thinking about it, if you know, and then and also the problem with trading numerous things is you're not going to be able to read the flows of the market itself, where we are at the market, because you're looking at each and individual trades, only looking at the price action and the technical analysis. You're not going to be able to form the good trades with high conviction that you can size. It doesn't mean that you're not going to make money, because there are many traders who is only looking at who is trading like millions of hundreds of trading hundred of products, but still make money, right?
Mm-hmm.
But I think the aim, so the approach that you're taking should be different from how big your aim is. If you're aiming to just make enough money every month, every day, I think trading many different tickers doesn't really matter, as long as your technical analysis is good enough. But if you're trading, if you're trying to go to the next level,
Mm-hmm.
which not many people makes, I think you shouldn't be really trading a lot of products, because one, you're going to lose your conviction. Two, you're not going to be able to concentrate. Three, you're not going to be able to pick up things that not many people picks up before it happens. Because for me, how I trade, like I said, I set up few narratives. I pick few products within the narratives, because doing so, I can monitor how products progresses, or how fundamental changes, how the data is from on chain, how the dilution of the holders changes over time, every day or every week or every other day,
Right.
right? I can keep track. So what I do is, initially, when I like the products, I size in small, and over time, as I grow my conviction, I can size bigger. A lot of trades, so the PNL, so a lot of good traders PNL is like this. It goes gradually, and then you hit home runs and jumps up. You don't lose much, and then again you make gradually, and then you find that another home run trades and then goes up. And this level to level, it doesn't happen often in your lifetime, right?
Right.
Each cycle, you don't see that many times. But if you're trading hundred of products, you're not going to be able to like quantum jump, right? You're not gonna get that to the next level for your
Right.
your seed money to go from 100K to mil, million to 5 mil, 5 mil to 20, 30 mil. You're only going to be gradually making if you're really good. And even that, you need a lot of, you need to be concentrated in the market for a long time, which is very tough for a human being to do it, because like in life, there are so many other things to do other than just watching chart, right? You have to meet your girlfriend, boyfriend, friends, gotta drink. You're gonna have some problem with your health, relationship, your family issue, whatever, right? So maintaining that concentration level is really tough for you to just trade so many things with high concentration level. That's what I've noticed over time.
Yeah, no, that's a great point. I subscribe to that as well. You know, what you mentioned in terms of conviction. And it's interesting you talk about like you size in small, you pick your sectors, and then you start specializing in how like you become a specialist in the flows of those specific sectors. And as your conviction grows, your size starts growing in those sectors, which is pretty interesting.
Correct.
An analogy is basically like analogy I can think of off the top is like, you know, Mark Zuckerberg is known to wear the same t-shirt and jeans every single day. And that's to eliminate the number of decisions he needs to make. You know what I mean? So it doesn't dilute his decision-making process. So yeah, I subscribe to the same thing. I mean, I can't handle more than, you know, a certain amount of positions at a time. And
but of course, like even if you're a specialist, I think you got to be very nimble. You know, you have to have a very flexible mindset.
Flexibility,
because
yeah, exactly.
Even now, like some of the traders that I've known from previous cycle who made a lot of money from DeFi, right? They're still doing a DeFi. They still trading DeFi because their brain is stuck with DeFi because they made money from DeFi. They've been only trading DeFi. Of course, it doesn't mean that you're not going to make money, but you're not flexible enough to change your mindset from one to the other, right? And because how crypto is developing so fast, and there are new narrative, new things, new products popping up left and right. If you're not flexible and be a specialist only on one things and then have too much conviction, it also it also gonna not benefit your trading, I think.
Yeah, 100%. I think flexibility is key, right? I mean, sometimes like I see people arguing on crypto Twitter in terms of like someone will have one viewpoint one day, but as a trader, you need to be able to be flexible and adapt. Your view can change the next day depending on what time frame you're trading, right? And you know what type of trading you're doing. But people are like, oh, you were bearish yesterday, you're bullish today. Well, yeah, I'm trading, bro, like I'm scalping, you know, like or whatever. You know what I'm saying? So we need to be able to be flexible in terms of narratives. And you know, if you just stick to one thing and you feel like if you're not adapting, like you said, crypto moves so fast. Like one day is like a week in this space, right? So yeah, I agree with that. I think that's really important. And you know, continuing on to the next topic that I wanted to talk to you about is risk management, right? So there's two issues when it comes to crypto. One I see is leverage, because the cost of entry is so low, you know, anyone can come in and start using leverage, and they don't even understand how to use leverage properly. Like some people I talk to, they don't even know what the difference between cross and isolated is, right? So, you know, I wanted to talk to you about that in terms of like, what does risk management look like for you, and how has that evolved for you over time? And there's a second part of this question is, have you dealt with a significant loss since you've been trading, and how did you go about dealing with that loss?
Okay. This is a very good question, because I can also read from crypto Twitters, like crypto Twitter people, the timeline, like people who replies onto it. People sometimes DM me. A lot of people have a problem with risk management. Also, me myself, I think every trader probably had their own problem with managing their risk. Initially, for me, as I'm Korean, I was going all in on one trade, you know, like make it on one trade, just like everybody else. I was only trading Bitcoin and ETH back in 2017 and 18. I was still making money, but it wasn't really doing a good trade. And then I also got liquidated twice at BitMEX, because of how I was trading. And over time, the risk management, I think it picks up in a way after losing a lot, or you just adjust to a level where you write a journal every day and then try to get rid of the bad habit that you have and just keep the good habit. This risk management part is all about sizing. So usually what that means is when you have a high conviction, when you size in, you're not going to be shaken away, but you're going to have you might have a problem with if there is a black swan event, wick happens and you're gonna get liquidated. So initially, for me, when I'm trading bigger market caps, I tend to trade less than 3x leverage of the positions of the margin, mainly because a major doesn't move more than 20-30% in one day, right? I have enough time to adjust how am I going to be trading, or how much position that I want to put in, or how much I want to take out.
Right.
If you go to, and then the risk management part comes in also by looking at the market cap of it, not just the chart, but market cap, how big of the market cap it is, how big of the trading volume there is. Because bigger market cap, of course, to have the effects on your net worth, you have to have a size, right? If you're $10,000 trading Bitcoin and Ethereum, it's not a good idea, because Bitcoin and Ethereum is not going to be moving like 20-30% every day. And because of that reason, a lot of people using like 10x, 20x leverage on Bitcoin and ETH, when they rather be better to trade 3x below leverage on the smaller cap market cap, because they move higher. They have a higher volatility. So you always got to think how much drawdown they're going to be when you're trading typical products. Depends on your conviction, because first, you want to make it when you really want to make it. If you're right, you want to make it, right? But two, at the same time, you got to be careful of losing the stack, right? So for me, I only try to put about 30-40% of my stack in perp account, and I put 70-60% on my spot exchange in my spot. So even if I do get a serial loss, I can always come back from my spot book. And even if I lose a lot, it doesn't really affect your mindset. So for me, I don't use more than 5x leverage. When I'm using 5x leverage, I probably would be using 3x for majors like Solana, ETH, Bitcoin, and then 2x less than like top 50 cap market cap or top 100 cap market cap. And if I do have a high conviction, I try to size big, because if you have a high conviction, meaning that you're gonna rarely lose, but you still have to make it. And that's when P&L like grinds up and pop with losing less, like having a less drawdown, sort of. That's how I do my risk management. And like I said, journal really helps. And then digging a lot of fundamentals also helps, because like Foundation can be selling tokens that you're not aware of, that you probably be finding out after everybody dumps on top of you. So always have to keep track on those. And you have to think about the narrative all the times. If you're shorting or longing, if there is no narratives, as a perpetual trader paying funding fees, you have to be mindful that it's a money too, right? So this open interest level, if you monitor it, you can have a high probability of dodging the wicks that happens oftenly in the crypto market. Usually can be a very big opportunity where you can make like 2x in one day, because there are wicks 20-30% everywhere. So looking at open interest definitely helps for risk management. And getting rid of, if you're writing journals, getting rid of bad habits and keeping the good habit is what you really need. If you're doing things right, you don't have to change, because you're going to keep it. That's the edge that you have in the market. But if you keep making mistakes, and if that are making you lose a certain trade over time, that is a bad habit that you got to get rid of. Of course, you have to get rid of that bad habit to manage your risk. Also, if you're having a winning days every single day or every single trades, of course, you got to size up, because your own point, you're in sync with the market, you have to size in. Because trader, like the job as a trader, it's a over time, it's a long journey, right? It's not a scalping, like it's like a marathon, it's not a sprint. So over time, you want the P&L graph to gradually grows, and you don't want that fluctuation, right? It doesn't affect it can't be like up like 2x and then down 50%, up 2x, down 50%, because eventually there's gonna be a situation where you're gonna lose, right? So try to minimize that. I think that's really important for you. If you're losing strike, you can't come up with the idea of I'm gonna make it all by single trade. I'm gonna find this thing that it's gonna do 10x one day. I'm gonna make it back. No, it never happens. It's always gonna fuck you up with mentality. Never gonna happen. So you can't be doing that. I think that's really like important thing. If you're winning, size up. Losing, just size down, because it's a long-term marathon.
Yeah, no, that was a great answer. I appreciate you going into detail, because yeah, that's the goal, right? You need to be able to size up and have, I guess that comes with experience. The conviction comes with experience, and like you said, journaling, because what you're talking about, the grind up and then getting to the next level, you need to be able to size in at the right time in your high conviction trades, because if you're not doing that, then you're missing out on that learning that you've done. You know what I mean? You're not taking advantage of how much time you've been in the market.
Yep. And then it kind of tricks your mindset, because you missed that big move. Like, for example, from September till now, all the memes went up like crazy, right?
Mm-hmm.
A lot of people who was trading fundamental tokens, VC-backed tokens, what happens is, because they're only trading VC-backed tokens, they're not making much as what people who is making with meme tokens, right? But it can't be affecting your trades, because if it affects, you're not trading your edge. If memes are not your edge, you shouldn't be trading memes, because even if you win right now, you're going to eventually lose, because it's not your edge.
Exactly.
When you win big time with something that without your edge, you just got to tell yourself you got lucky. You got lucky. I got it. I'm very happy. I shouldn't be touching again. Like, if that ego tops up where, okay, I haven't been trading memes for a while, but I trade this meme, I made a lot of money in one trade. I feel like I'm genius, right? I feel smart. And that's the time when you got to be really careful, because usually it means that you got lucky with market, because it wasn't your edge, that you wasn't trading this product before and you made money. And probably a lot of times, because you got that ego problem creeps in, you're going to be trading again with bigger size, thinking that you're going to win again, probably leading to losing strikes, losing your edge. And then eventually you're going to look for the trade that's going to make 10x of your 10x using more leverage, and then eventually blow ups.
Yeah, 100%. I mean, we saw this last cycle. I personally know people that, made a lot of money because everything was going up. There was no edge, right? It was just bet more, bet more, bet more. And then they ended up losing. They wiped everything out. Yeah. Leverage, and then wiped it all out. Yeah, I'm in the same boat in terms of leverage when my 3 to 5x is my sweet spot as well. I feel like 3 to 5 gives me enough breathing room. And yeah, that's what works well for me as well. Obviously, this varies from trader to trader and the trading style and what kind of edge they have. But I definitely relate to you on the leverage part. So
I want to stand up. I want to make a point also. So for me, I did a challenge from 100K from last year Q1 until now. So it took me about a year and a half to make 100K accounts to about $6 million. I've never used more than 5x leverage. I want all the listener to really understand leverage is not the key for you to make a lot of money. Like, it never is. You don't need high leverage trades all the time to really make it. If you're really keen to using 10x leverage or more, that is more close to gamble, right? If you're gambling, trade in short term, or if you're doing it, just do isolated with small margin, that even if you're going to lose, it's not going to affect your mental health.
Yeah, absolutely. That's huge. And I think, leverage is misused heavily. You mentioned isolated. I bet, like half the people that are already listening are going to be like, what's the difference between isolated and cross? So that's what I've seen a lot, man. I've seen that a lot. So yeah, whoever's listening in, if you don't understand, first of all, if you're leverage trading and you don't understand the difference between cross and isolated, highly urge that you go and, understand what that means. And before you even step foot into this, and take it seriously, because your results are going to be proportional to the amount of effort that you're putting into it. If you see it as a casino, your results are going to be, the same as a casino, and the house always wins in that case. Yeah. Right.
Market always wins. You're never going to win market. You just got to ride market.
Yeah, it's a rude awakening, right? When that happens, because some people will, I've gotten DMs where, man, I ran up an account from, a couple thousand to 6 figures or whatever number it is. And then I blew it all up. Right. Yeah. And it's like you said, if you don't have any chips left, you're in trouble, right? Like, now you have to go off and, you know, it's a whole thing of, you know, if you're going to come back to the space or not, you need to generate that revenue and have that money to come back and be in the space again. So it's all about like preservation of the chips in order for you to keep, I guess in the beginning, it's more so about preservation of capital for sure, right? When you're growing an account, you need to be able, you're paying tuition, right? But you want to minimize the amount of tuition you're paying to get to a point where you have an edge.
Yeah. I think some of the listeners, if you're really like new to it and then starting to learn about it, I think a lot of people should be reading the education book for poker playing. You know, understanding how to play poker really helps with trading, because you're understanding where you're putting money at what sort of a situation. If you have a pocket ace, you usually goes all in. It doesn't mean that you're not going to be all in every trades, but you have a higher probability leading the plus EV situation where more often times you're going to be winning than losing with pocket aces, pocket kings, or pocket jacks, right? So it applies same for the trading as well. So you can see a lot of professional poker players that have been trading in the market are usually successful traders than losing traders, right?
Yeah.
But but I haven't been seeing really like good, smart, like professional level, professor level, smart people making a lot of money, because trading is all about understanding risk rewards, you know? Like it's not about being super smart. Like super smart doesn't guarantee you a chunk of cash, I think, from the market especially.
Yeah, I agree with that. In fact, like super smart could be a hindrance because it's hard for you. Like I feel like super smart people can't pivot sometimes. Like they become very rigid when they think. So it's like you said, and I've seen that. Go ahead. Sorry. Go ahead.
No, that's also linked to the part where I said you got to be flexible, because the problem with super smart people is that this is fundamentally great, and then you studied hundreds of books, hundreds of YouTube videos, got the perfect setup. What happens is, because you're so smart, you're going to counter trade yourself. You see 90% of things that it aligns that you got a long, but you see that 10% things that it kind of like touches you, it tingles you, right? And then what happens is you can't click. The problem, the trading is eventually whether or not if you're gonna click or not. You know, if you see the right opportunity, you gotta have a guts to click, right? If you're really smart and studying so many indicators, so many setups, so many fundamentals, now the problem is those things that you have studied, that it's going to backfire you. That's another thing that you got to consider.
Yeah, 100%. And I think, like you said, like studying poker, because I've seen a lot of like professional poker players or people who are good at poker coming into the space and killing it because they understand sizing, how to bet, and you know, all of those things, which isn't intuitive. Like I think, like naturally speaking, it's against our nature actually. Like generally speaking, you know, because emotions come into play and you know, like it just throws you in for a spiral. So yeah, no, that's great advice. Along the same lines, you know, I read this book and it's called Best Loser Wins by Tom Hugard, and it's a phenomenal book. It talks about how important it is to be able to accept losses and not have your ego tied to the market. What qualities do you think are like important for a trader to be successful? And the second part of this question is, you've probably talked to, you know, over the years, you probably, obviously people DM you, talk to you. You've probably seen people who've failed to become consistently profitable as traders and left the space. So on the other hand, why do you think most people fail? And yeah, so two parts. What qualities do you think make people successful, and why do you think people fail?
What makes people successful and why they fail? I think regarding the ego, I think you got to just admit to the fact that market is always right. If you're not making money, it means market is not wrong, but you're wrong. You know, you're doing something wrong. You just got to check what's wrong. What is the things that you're making into a wrong decision, right? And ego plays out really well. If you're humble, you accept the fact that you're wrong, right? It's always hard for people to understand the loss and admit that you made a stupid mistake, because it's just way to how it is. It's really hard to tell yourself that you're dumb, right? Like everybody thinks they're smart. But when you're losing, when you're not making it, when you're not making the market, when you're losing especially, it just means that market is more efficient than you are. And then you just got to be humble, you know? I think successful traders that I met in the market over times is all of them are very humble, only because they accept the fact that loss is just a journey, like as a trader, like it's always going to be there as a trader. And then if your ego tops out, it usually the time when you lose your skill set because you're too concrete about the idea that you came up with, that you're telling people that it's going to happen. You believe in yourself, even the market go offside, because you're telling yourself that you're right and market is wrong. That's when people lose a lot. You know, like some people who stays in the market usually accept the fact that market is always right and you're wrong, and then try to find what is the problem that you had, that even if you had a conviction that your P&L didn't grow up, you just gotta adapt, right? And people who gives up is, I think, people just gives up who loses. I think a lot of times, I think again it's a mental thing, right? Because every technical things are out there in the market. Every fundamental things is out in the market. You know, everybody's seeing things in the same way. And it's really easy to understand understand tokenomics or the transactions if you really put efforts into it. But it just, if you have too high conviction, if the ego controls you, I think that's when they lose. Like eventually, over time, it's a good thing that it can make you a great money, but at the same time, it's a double-edged sword where you're gonna lose it because your ego is too strong.
Yeah.
You just gotta be humble.
Yeah, absolutely. Yeah, I've seen that so many times. Like people who win a lot, but then they lose the money the same way, right? So yeah, I appreciate you sharing that advice. Let's pivot a little bit. Let's talk about what your views are in the short term in terms of the market. We'll say like the next few weeks, and then perhaps the next few months. Like where do you see things are headed from how you're looking at it currently?
Right. Few weeks. I think few weeks time frame. I think we're slightly bullish, but we're still in a very choppy market where, as a perpetual trader, I think if there is any good pops, 10-15% with small term, short term rotating narrative in the market, I think you should be taking profits. But
Right.
if you're trading over a few months, if I'm looking at a few months time frame, I'm very bullish. I think bottom is in. We're not going to go below previous low of like
It was like
56,000.
56.
Yeah, I don't think we're gonna go there at all. I think we're just gonna, I think towards the election and how macro is playing out, I think year end should be very phenomenal. I think it's gonna be very bullish. Where I think we finally might get to a point where everybody is so like super genius, super smart season.
Yeah.
So I think everything is really aligned for leg up in a few months. So I'm very excited for that. So if you're a spot holders, I think if you have chosen the right one, after doing a lot of fundamental research, if you have a high conviction, try to sit on your hands, try to do nothing, maybe enjoy the time of summer. If not, if a perpetual trader, I think still choppy market, take some profit, try to make that gain as much as possible to really go all in towards the real bull market.
Yeah. No, that's great advice. My thinking is in line with yours. I think we're still chopping. It'll be a while. Like there's just patience required, right? And it's very fascinating to see. Like I was monitoring Twitter when we broke down out of the range and we went into 56K, and like the amount of bearishness and FUD that came through, where like it's a permanent top, and but it's the same every time, right? And I think like that can be taken advantage of. Like aggregate crowd behavior will not change ever. It's always the same at tops and bottoms.
It's always the same. Yeah, always the same.
Yeah.
And also, I mean, in my timeline at least, I haven't seen many, because I have a curated followers. I haven't seen many of the people who was calling permanent top. But I had some friends DMing me like, "Is it permanent top?" The thing is, if you're just looking back cycles, we haven't really, like, we went up a lot, but we haven't really went up to a point where there are a lot of retails in the market, you know,
Right.
because the market is zero-sum games. If somebody wins, somebody has to lose, and usually it's a fact that retail lose. But if we haven't seen the retail came into the market, who is actually going to be losing here, right? Like all the people in the Twitter space is quite smart, and funds are like much more smart. But if they're not really trading like small tokens and only trading like BTC, ETF, Solana, or like bigger market cap, they're trading against retails, right? We're trading against retails, so-called, because we're so-called like smart guys in the market, right?
Right.
We haven't seen the retails yet in the market. So how are we going to be topping up, right? Market going to shift. Like market sentiments usually just shift as the price goes up, right? Like even ETH, everybody was just trash talking about like below 3K, you know? Nobody was expecting ETH ETF gonna potentially happen, even though compared to BTC was really oversold, and not many people had exposure on ETH. They would rather go Solana or just stay in Bitcoin or stay in shitcoins or meme coins, right?
Right.
But it just happened out of nowhere, right? As soon as it happened, the sentiment over ETH have just dramatically changed. Now it becomes, wow, it's like it's a great token, you know, like it's an asset, it's a future computer, you know. So what you see from the timeline is very shorter terms from bigger picture that you should be always like ignoring, right? Like
Absolutely.
you should be having a like very curated like Twitters. I think even the Twitter, there are too much noise. So I mean, like it's good and bad at the same time, because there are really good people and there are really bad people, which meaning that it's really good to gauge the sentiment in the market.
Right.
So use it wisely. I think Twitter is still a great tool, even though not many people are tweeting as before previous cycle. And that also meaning that we're not topping up. Like you know, you don't see that girls singing about having a boyfriend who trades crypto, right? Nobody talks like songs about NFTs. So for me, I'm permanently think market gonna top out. When my mom calls me, I tell this to many of my friends. When my mom asked me, so my mom asked me about NFTs 2021 November. She asked me, my mom is Korean, and she asked me about NFTs all of a sudden, only because she saw some famous professor from Korea University came out in a TV show on weekend around like 6 p.m. where like family watches, right? And there was a professor like giving a lecture about NFT. She was asking me, you know, that's the permanent top, you know. I think this cycle, if she asked me about decentralized AI, which is the hot word, like the keywords of the market cycle, if she asked me about that, I would probably think we're close to the market pico high for this cycle. So
yeah, well, you let me know, bro. DM me when your mother DMs you.
For sure, I'll let you know. I'll probably might do another interview, you know, like
we'll get you on again. Yeah, the title will be Josh's mom texting him about decentralized AI.
My mom is ultimate retail. Like, you know, my mom is ultimate retail. So until my mom asks me about that, I'll be permanent bull. I'll be permanent bull.
Yeah, no, absolutely. And it's like you said, you know, price is an advertising mechanism, right? People like you said, ETH was like, you know, there's so much FUD, it's gonna get rejected, it's going to zero, it's a security, you know, and then like obviously, you know, you get a few green candles and that changes, right? Now it's that's all it takes. That's all it takes.
And then really, like BTC is really undervalued, I think. You know, like comparing to
agreed.
and gold,
agreed, 100%. And I think for a long sorry, go ahead.
No, go ahead.
Yeah, I think on a long term, it's definitely, you know, undervalued for sure. Like that goes without saying. So completely agree there. And you know, you talk about like curating your Twitter, and yeah, my Twitter is fairly curated as well. Like I only follow like, you know, maybe I think it's like 500 people that I've mostly picked out in terms of who I'm following. And that's just everyone that's listening in. You do the same. Make sure, you know, you curate your you know, who you're following, and understand, you know, the information that you're seeing, and filter that noise out. It's also good to have counter trend indicators as well. You know, I do read that as well. And it was funny because I was tracking that sentiment during this range, you know, towards the bottom of the range, people were calling for lower. It was fascinating because the mentality was, okay, well, first, like, I was eyeing the yearly VWAP, which was like around 56. But when we got to 56, everyone's eyeing 52 for some odd
Yeah,
reason. I'm like, okay, that's literally $4,000 away, bro. Like, why are we now? We were first waiting for 56. We got to 56. Now it's 52,
yeah,
right? So that was really
always
interesting to see.
rotates. I think it's just I think as a trader, the most money that you're gonna make is when there is most fear in the market. There's gonna be most opportunity because not many people is taking risk, right? And when everybody's FOMOing, that's usually when you should be taking some risk off. Because I think it just naturally happens because we're in the zero sum, right?
Exactly.
Somebody wins,
100%.
somebody gotta lose, right? Somebody
Yeah,
calls
yeah.
52 all the time at 56, just you miss that, and then you're eventually gonna buy higher price than you wanted to buy, and then it's just like helping guys like us to having more profit. I think like it just happens every cycle, mini cycle, small time frame, bigger time frame. I think it's just nature of market.
Yeah, 100%. All right. So, we're talking about the short-term views, medium-term views. What I wanted to ask about was, there's this conversation going around in terms of, well, last cycle was different because, because of COVID, there was money being printed. So retail was sitting at home and they were getting money handed to them. So they came into the market, they got cleansed, and now
Yeah,
they don't have, that same money isn't present to come back into the market.
yeah.
What's your thought on that? What's your thought on in terms of, hey, retail is not coming. That's it. Like the retail, they came last time, they got cleansed, and there's no money to go around this time around. What's your general thought process on that?
I think retail has to come only because price will go up
Yeah.
because people are gonna make money, and if some people want to make money, as a retail, you want to make money, right? And even though you don't have money, you're probably gonna borrow money to trade. Like it's just nature of how it is. Of course, we're not going to be seeing potential growth like last cycle because there are many more products right now, and the market cap itself is higher than before, right? But eventually, when Bitcoin do go higher than 100K, I think it is very possible that happens in not few months, but like less than a year time frame. If that happens, I think even the most hated like VC token is gonna rip.
Yeah.
And I think eventually retail is going to look at it compared to stock market, sell stocks. Like if they don't have cash and only have stocks, they're going to sell stocks and come to crypto. If they don't even have a stocks and cash, I think they're going to just borrow from banks and then just trade. I think eventually retail is going to come because, like you mentioned, if price goes high, people get FOMO, retail comes in. If my friends make money trading crypto, that friend's going to come into crypto.
Yeah, 100%. And I think last cycle, there were stories of people basically putting their home on loan to
Yeah.
to buy crypto. You know what I mean? So
Or even do the ill farming on Luna. There were so many
yeah,
Koreans were doing it. They were literally putting their house, getting like a ton of loans to just stack into a Luna stable to get the yields. There were so many people. I think it's
right.
gonna eventually it's gonna happen because over time people forget.
Oh, you're right. Yeah, 100%. I agree with
Yeah.
that. So, we were talking about narratives, and you did mention some narratives that you're keeping your eye on. If you could repeat, like, some narratives that you're keeping your eye on. Also, like specifically, I wanted to talk to you about, like, really quickly about perp sexes and what do you think is currently holding them back, and what are your general thoughts on where that sector could go in the future? What are some lapses that you see in perp sexes currently?
So I think the narrative that I think over time I'm gonna be focusing is gonna be AI. Memes will never top until market cycle tops. So it has to be potentially out of EA, mainly because the potential growth of our EA sector is higher than any other sectors in the market. I think GameFi gonna come at the end when retail comes in because I think GameFi can be a gateway for them to come into the Web3 because of the user experience going to be much smoother than the previous cycle GameFi. Because previous cycle GameFi, like I mentioned earlier, I think is more to do with gamified ill generating rather than just game itself. But now because there are so much money that's been filled into the system for the last 2-3 years, there are good games coming out. So I think that's coming at the end of the cycle. Regarding the perp decks, I think we just haven't seen the right product yet, because I think the potential of perp deck is always in the market from when I was from like 2017, like back then DYDX was getting a investment from Coinbase Venture at 20 mil val, and over time there were a lot of perp decks because people was betting off the fact that perp trading volume is usually 10 to 50x of spot trading volume. The amount of the fee that they're generating are going to be much higher than trading spot. But I think we haven't seen that user base coming into the using a perp dex because of the UX mostly, and because as a regulation grows and the taxation becomes heavily controlled, I think there's going to be a growth in the perp dex market. Just given the fact that more users are going to come who doesn't want to be trading their funds in the central exchange, because one, they might get tracked, maybe they have to pay more taxes. So I think the user base is going to grow eventually, but we haven't seen the right product yet, I think, because a lot of the perp decks right now having incentive programs for the users is if users make more volume, they incentivize them by giving their tokens. What it means is if the market condition is not volatile, they're not generating revenue, but they're still giving out tokens because they're going to be always a bot who wants to milk out the tokens by trading, generating volume, right?
Right.
And it just doesn't have that, like the sinkhole of the token value capture from perp dex generated volume are not always synced in the market. We haven't actually seen the good ones yet, but I think there will be one. I'm hoping Best can be the one, and I'm hoping so. So I think it will eventually come, but I think it's also another sector that will pick up at the later stage of, given the fact that market is still not mature. Market is very efficient, more efficient than the previous cycle, given the fact that everything is not going up, but very isolated, because isolated things are going up, telling us that market is more efficient than the last cycle. And then for the perp dex to really grow, then it has to be more efficient for them to really pick up like users. That has to have an edge over central exchange. But I think it will eventually come.
Yeah, no, I agree with you. I think the issue that I've seen is like, there's all these incentives in terms of the airdrop campaigns, and that's what generates most of the volume. But once that's gone, I've seen some decks just fall off the face of the earth. Like it's like they don't, you know what I mean? So yeah, but like you said, I think in the future, I definitely can see like picking up, and we still haven't seen the one perps decks, and yeah, looking at Vest, and I'm an advisor for Vest as well. Really working hard behind the scenes to make sure that we position ourselves to kind of take the cake when it comes to that.
Yeah, I really hope like ZK Sync Tech reducing the stress of the user trading might really have a edge over other perp dexes.
Yeah, that's a goal, man. That's a goal. All right, so we've kind of covered the narratives, the macro. I did ask, I kind of posted this late, but I wanted to get some audience questions. People love asking questions and poking when you're tweeting, but when you ask them for questions, I've gotten no questions. But that's okay. That's okay. I do this new section. It's called it's like a rapid fire round. So it's like mostly like to check out like system one kind of level thinking, and it's basically like I say a word and you just say like the first word that comes to your mind, like word or two, right? Okay, so let's try it out. Let's see how this goes. We can leave it out if it doesn't turn out well. But okay. So here we go. So the first word is Solana.
Bullish.
Okay. ETH.
Bullish.
Crypto Twitter.
99% of them is scam. It's not a word. I'm sorry.
Bitcoin ETF.
Good. Has to. Good. Very good.
BlackRock.
Great.
We love BlackRock. Meme coins.
We love BlackRock. Meme coins. Probably the only opportunity for most of the traders to make home run.
Trading Edge.
Humble.
Gambling.
all in or fold.
Leverage.
Humble.
All right, awesome, man. Yeah, those are just some words that I want to throw out. Yeah, because there was no question, so I always try to do like this little section. It keeps things interesting. Keeps things interesting.
That's cool, man. That's cool.
All right, man. Just to pivot a little bit, you know, we talked everything crypto related. We talked about kind of your mindset, how you approach things. What I'm also interested in, I ask everyone that comes on is like, what a typical day looks like for you, what your current routine is, like, how do you manage your time? What do you do like when you're stressed out? How do you reset in that sense?
So I think my routine is, I think I should be changing my routine as well, but my routine is very simple. I wake up, I read what happened overnight, look at all the group chat, all the CT that I put alert, take a shower, come to the desk, look at all the charts, and see if anything developed over a day. I eat, come back to the desk, spend another 4 or 5 hours straight reading timelines, papers, research, newses, look at chart again, discuss with my teams if there is any good trading catalyst events, news, or price actions happens in the market. But I've noticed I'm actually not really doing my best to manage my stress. You know, that's I think that's also a weak part for me. But I also found out that my stress. I did some blood tests like a year back, and I found out that my stress tolerance is like 5x higher than the ordinary people. So I think most of the good traders have a high stress tolerance level. So I think I'm just sucking it up, but I also should be taking some stress off. The good part is I don't have any problem with my friends, girlfriends, families. So I can be focused in the market most of the time, which is usually a good thing.
Yeah, no, 100%. Yeah, like you know, the one thing I will say, and what I've learned is, you know, I was the same way in terms of like managing stress and being able to do that. But what I will say is, over time, there's only so much your body can take, right? So it does catch up over time. And you know, that's just how we are. We're just built this way, where we just stay in front of the screen. We handle a lot of stress. But yeah, one thing, like I try to like send out this message to whoever's listening in as well. Yeah, like I mean, I've spent 16, 18-hour days, you know, at the screen. And at some point you do need to be able to like manage that, because it does catch up. So like, you know, whether it's like a walk outside, making sure you're socializing, working out, like taking care of your health, you know, and generally speaking, I think that also, I feel like, has made my trading better. You know, just managing that aspect as well. So
I 100% agree. I think you just mentioned a very great point. I want to do it too, you know, but I just like works. I just like being in the crypto market. I really love it. That's why I'm kind of addicted to the market, right?
I'm the same
really
way, bro. I'm the same way. I understand.
But really, you got to work out. You know, I've been trying to work out, but I think workout really helps. I used to work out a lot before I fully like trading, just like how I'm doing right now. But workout is really, you have to work out. You have to find some sort of a way to relieve your stress, because yeah, man, like if you make it, where are you gonna be spending your money if you're only gonna be stuck in the market forever, right? Like there's gonna be always that point where you're gonna be like stepping out, right? So I think once a week, at least you have to take some stress away. I think that's really must thing that you gotta do, unless you wanna worn out, and then what happens is you're worn out after so many months of not taking a rest. If the market does really goes vertical, and then you're so tired of staying at the desk for too long when market is not really picked up yet, you're gonna lose the opportunity, right? And you're gonna probably tell yourself that you're an idiot over month and month, giving stress to yourself, not able to get back in, and eventually it's gonna affect your mindset, affect your trades, and it's never gonna affect well. So of course you have to manage your stress, have a good relationship with your friends, take some stress off, maybe drinking, clubbing, exercising, whatever helps, just do it. I also advise for you guys.
Yeah, 100%. And like, one thing, Josh, I did, like, I've studied people throughout. Like, I study people that are athletes, are successful athletes, traders in the financial market, any realm of life, right? People are at the top of their game. I think one thing that's important to mention is there's always a period of time where they're so obsessed with their craft that nothing else matters, right?
Yeah.
They're so obsessed that everything else basically fades away. And
Yeah.
that's what separates like good from great, right? So I mean, not many people are willing to go that extra step, but you need to understand what sacrifice, like, it's always a trade-off, right? It's you need to trade something in to go to that next level. And yeah, there's always that certain time period that you need to do that, but that's not sustainable. It's only a very certain period of time. You can't do that forever, right? Otherwise everything starts falling apart.
Yeah, I think that was a great point. So this is my 3 cycle, right? First cycle, I made millions. Second cycle, I made close to 8 figures. But every single cycle, I didn't stop myself. I thought I was always going to be making money. I saw the market as ATM, right? But just like we discussed earlier about the ego part, it always kicks up over time as a trader. If you're like having a winning streak, there's gonna be always a moment where you're gonna have an ego problem, and even if you made enough, because you're so into the market and missing the time where you have to just leave the desk, you're eventually gonna lose it. Because I lost it. Something happens. For me, it was FTX, Luna. Nobody expected. A lot of people lost, right? A lot of people lost. But if I was the person, if I am right now, who understand the market and who knows, okay, like maybe it's the top of the market, or maybe it's not the top, but I'm like, I think at 80% we're there. It's like seeing so many signs over time. That's usually, even though you're a great trader, for your mind and to not lose what you have made over time, spending 14, 16 hours every single day for a few years, you need that time to be like stay away from the market. I think that's really important, because a lot of people who is listening to it, or me myself, or Stoic himself, like stays in the desk like 16 hours, 18 hours, 14 hours, right? You're putting a lot of effort to it, right? But if you're not gonna keep that, like, that's meaningless. We've been sacrificing so many things,
Absolutely.
so many things of our life, like weather is so great, but I'm looking at my chart. Outside is great. My friends are calling me, but I'm looking at my chart because volatility is good. You have sacrificed so many years for that, right? So many years to make it happen, to make that like net worth, right? But if you don't enjoy it, why would you be like? Of course, you learned a lot of things, that your skill set, where for the next cycle you're gonna make it. But if you're not enjoying it, like what's gonna matter, right? Like the money is all meant for us to have a great life, and not many of us gonna be where legendary traders are at. Like it's a very like a lot of things has to match for them to got even to that point. But most of us are not gonna get there. It doesn't mean that you gotta push, right? Everybody has to push. Market is equal. You just gotta ride the market, adapt, but you just gotta leave at some point. Just take profit, leave, cash out, spend it with your family, spend it with your friends, to just really enjoy, because you have sacrificed a lot.
Yeah, that's so important, Josh. Like, the one thing that hurts the most is like, it's not even the money. It's like the sacrifices that you've made. There's all the sacrifice. You don't have, you to do this, you have to be extremely focused. So there's a lot of things that you have to ignore. So if you're not taking advantage of that, like at the end of the day, that's what hurts the most. So yeah, I love that advice that you gave. And we're coming up on the last part of this discussion, and this has been great, man. We got to get you on again. And it's been a great conversation. So you've been you just gave some advice, in terms of like how to think about the market and how to like manage your stress and all that stuff. But what advice would you give in general to anyone that's listening in for this cycle, or if they're trading, what advice would you give to them?
Okay. overall
Overall,
in
it
our
could be
company.
anything. It could be anything in terms of learning, in terms of like how they should approach the market. It could be anything, or even life advice, anything.
First is stay humble. Do not use too much leverage. Don't get liquidated before the bull market comes in. Don't hate VC tokens. Because I see a lot of hates in the market regarding this VC tokens. But again, if BTC goes to a certain level, all the VC tokens gonna perform well. Some outperform the others, but those are the products that we should be always looking into, because for 3-4 months it's been down only, it doesn't mean that it's not going to be going up forever, right? And there are going to be few sectors, few projects that is under owned or underslept because it was VC backed. Please just don't hate the VC tokens, right? Like, you got to have a flexible mindset. Right now, memes are sucking up all the liquidity, AI is sucking up all the liquidity, but it might change as soon as the memes makes local high for some reason, right? That we don't know, we don't expect. If you're only trading one sector, one memes, because every attention is over there, it's good for short term, but you're not really diluting yourself enough to have a variety of asset classes, right? So please just be humble, don't get liquidated. Just don't have too much hate on the VC tokens, because there will be eventually opportunity for those things to run up too. And grow your own edge, like just ditch your bad habits, just keep your good habits. That's your edge, right? If you've been making with looking at this indicator, and if people say looking at indicators is not good, like, don't listen to them. Like, if it worked for you, it's going to work for you. If it made you money, just keep it. Things that made you lose your money, just try to get rid of it as much as possible, as many as possible. And also, because there are so many information in the space, you can't you're not going to know every single thing. So picking few things and try to go in depth looking into it, and then try to understand how their fundamental have actually affected price actions. Because it eventually going to happen, because as the market grows, there are a lot of forms of money going to come in. Like, different structure. The market is structured in very different manners than previous cycle. So if you do understand fundamentals of tokens behind it, because right now, because all the memes, like, people believe there is no fundamental at all. If narrative shifts, the fundamental study that you have done will eventually give you the edge or alpha that not many people know, because everybody is focusing on the meme part. So please have a flexibility and looking at things. Don't chase every single things because you missed out 50% of pump on Pepe because it wasn't your edge, right? If it's not your edge, don't try to make your edge. Don't try to chase that edge to become your edge, because it's gonna take a lot of time and a lot of effort for that to be your edge. It's gonna cost you money. It's gonna cost you concentration. It's gonna cost you the opportunity cost. So do the best thing that you're good at.
Yeah, 100%. Thank you for sharing all of that. And I think it's so important to understand that, like you said, I mean, even just removing bad habits incrementally can create an edge. Like, you're just less worse. Even that is an edge in of itself, just eliminating bad habits. And like you said, I mean, I think flexibility is like one of the main aspects of trading. If you can't be flexible, it's that has to be like a really key thing. And when it comes to trading, you need to learn how to cut losers quick. You need to learn how to be flexible. So I really appreciate you sharing that. You were, I know you have like a pretty curated, you mentioned you had a pretty curated Twitter list. I'm always looking to have like people on for a conversation. Is there anyone that you'd like to nominate, or, anyone that you'd like to see for an episode?
I do. This guy is not really active on the Twitter, but I constantly talk to him like every other day or every week, once a while. He used to be a Binance top 3 or 4, but he closed. He closed sharing his positions. His Twitter is constant. He used to be a constant Phoenix. I think he would be a great panel for the conversation.
Okay, awesome. We'll try to get him on. I'm obviously going to try to go through you, so we could try to talk to him and get him on for sure. And I'll definitely, like, it would be great to have you on again. I really enjoyed this conversation. Is there anything else that you'd like to plug or talk about or anything before we wrap up the episode?
Bull market is coming. I can feel it. Bull market is coming. I'm so excited. We just gotta bear a few months.
The balls are tingling, huh? Balls are tingling.
Yeah.
Bull market.
It is tingling. It is tingling. I can feel it.
All right, awesome, man. But I usually like to end these like on a quote or like a thought-provoking statement. And you know, we've been talking about this is like a recurring theme during this episode. And what I want to mention and something I want to bring up is Miyamoto Musashi, who's like he's a legendary samurai and considered one of the best swordsmen of all time. He has two quotes that I want to like end this conversation off with. The first one is, the purpose of today's training is to defeat yesterday's understanding. And the second one is, fixation is the way to death and fluidity is the way to life. So this has kind of been a recurring theme in terms of adaptability and trying to improve yourself incrementally, removing bad habits and getting better. I think it relates so well to trading as well, right?
Yep.
So Josh, I really appreciate you taking the time to have this conversation with me. To everyone listening in, I hope you enjoyed this conversation and were able to take away some actionable items or things that you can improve upon. Until next time, thank you.
Thank you. I really enjoyed the conversation having with you. Thanks for inviting me.
Of course, man. Of course. We'll get you back on again.